Very good morning, everyone. Hope you all must be doing great. So today we are starting with the workout batch, day one. And you all know it's a 10-day batch. And uh, although I would just not just be solving questions, answers with you, I would also be discussing the concepts also behind those questions. So somebody was asking me yesterday, sir, whether only just the question answers will be discussed or the concepts will also be discussed. See, there are a few limitations also because we have limited time. So I'm not saying that 100% concepts will be discussed, but most of the important concepts I'll be discussing along with the questions. So most of the concepts will be, I believe that they might be clear to you. You might be forgetting. One of the challenge which we face in the examination in all the papers, not only in income tax, but in fact in all the papers, one of the challenge which we face is regarding the presentation. So this workout batch is with a motive that you should understand what the examiner is asking from you. You should know how to present itself, and more importantly, that how you can solve the entire paper within the time frame of 3 hours. Right. So it is very, very important to do the practice as well. So this is how this practice batch and workout batch would be. So I believe that after this 10 days, even after 5-7 days, you will be feeling very, very confident. Provided I would request you to attend these 10 days very, very diligently, religiously. Second thing is, I know that your examinations are around the corner. It's been almost more than a month, little bit more than a month is left for the examination. But guys, I will be also be giving you some homework questions. Not much. I understand you have other subjects to do, but at least 2 questions I will be giving it to you on daily basis. At least 2, sometimes 1 also, sometimes 3 also, but on an average 2 questions I'll be giving. I would be requesting everyone to please do that question. It is very important. People, you are struggling with the internet. Okay. So I would request you to do your questions also, do the homework also, the questions which we are doing today during the classes. You have to complete that first of all in the class itself. Then after that, it would be just an half an hour homework or so. So if you are doing it diligently, so I'm telling you that guys, within this 10 days, you will get so much of confidence. You will feel so light regarding this income tax paper. So this is what you need to promise with me. I believe that everybody is ready for it. Yes or no? Are you all ready for it? You can message me on the group itself. And one of the requests is, first request, at any point of time, if my video gets blurred, please do let me know. Second thing, very good. Redmi, what is your name? Redmi, what is your name? Should I call you Redmi? Okay. Second thing, whenever my video gets blurred, please let me know. Second thing is that whenever Joseph, okay, Joseph. The second thing is whenever you have any doubt, you can either unmute yourself and you can ask me right there. It's no problem. You can unmute yourself and you can ask me right there. So I'll be answering you right there and then. And if it relates to any other class, then I'll be telling you that I'll be discussing in that particular lecture. Correct. But yes, please ask your doubt. Unmute yourself. Or if you don't want to unmute or any problem with the mic or anything, then you can also give me your message through this chat. And whenever you will be giving the message, just don't do a direct chat just to me. Just send your chat on the meeting group itself, so that when I'll answer, so everybody should understand that what was the question and what is I'm answering. Correct? So this is what is required from you. Otherwise, I'm telling you guys that this 10 days, if you are with me, you will actually get a very, very good grip on this income tax. Now, I am believing that you know little bit about income tax. I am believing that you are not that expert, but little bit at least you know about income tax. So the day would be as follows. On the first 6 days, we would be discussing chapter wise, and from 7th day onwards, 7th, 8th, 9th, and 10th, we'll be more be concentrating towards total income questions. We'll more be concentrating over total income questions. So 4 days specifically for total income questions. But in the initial 6 days, we'll be doing the chapter wise revision. So I believe that although I have shared also with you, you might have received on WhatsApp also this particular file. So this is the file for not the entire 10 days, but today I have shared for 1 day. Probably today in the evening I'll be sharing for more days. But since I am updating it, so it is not just a one file. I'll be sending it in multiple file daily basis, or probably within next 2-3 days I'll be able to complete. Then I'll be sending you the one consolidated file. So if you have not received it, it means that you have not saved my number, because I have set the broadcast messages. So if you have received it, then good. If you have not received it, so please save my number so that you can receive it. And also you will be getting the Google Drive link also today. Today in the evening, you will be getting an email. So that on any day, if you miss any of your classes, don't worry about it. You will be getting the backup as well. So it doesn't mean that, see, if you ask me on any day which one is better, live or recorded, I would say I would prefer live batches, because live batches you don't have burden to complete it. So live batches actually is something which is more beneficial. Although recorded is also good, but the thing is that I would prefer live batches. So please, so you would be getting the recording. Don't worry, recording you will be getting, but please try to attend the live batches, as in fact the entire 10 days I would request you to be on the live batches. Okay, so the day would be like this. On the day one, today we would be discussing chapter wise basic concepts and residential status. More residential status today, because basic concepts is quite easy. So basic concepts is easy, no issues. But yes, in basic concepts we have two particular points like rebate and surcharge. We have to discuss that. So today we'll be discussing that. Surcharge, if I get time today, then I'll discuss it today. Otherwise, surcharge I will be discussing with total income questions. So don't worry about it. We'll be discussing surcharge as well. Day 2 would be salary and house property. PGBP next. Capital gains and IFOs on day 4. Deductions, clubbing. And if the time permits, set off also on day 5. Otherwise, set off will be on day 6. TDS, TCS, advanced tax, ROI on day 6. And from day 7, we'll start with the total income questions. So this is how the schedule would look like. No need to write. You have this with you, and you will be getting this on the Google Drive also. So let us start with the first day, day 1. Today, first I'll be starting with the residential status. Everybody, please write with me. Everybody, please write with me. Before I jump into the question, let us understand some basic concepts about residential status. Especially residential status of individual. Please write with me. Quickly, we'll not make the full notes, but a quick short notes we will make. So residential status of individual. At any time my video gets blurred, please do let me know. See, although we have residential status for other persons also, but most importantly, it is 99% you will get a residential status of individual. 1% chances of HUF also. So I'll be telling you how to determine for HUF as well. But first of all, individual is most important for us. So residential status of individual, how we determine, we all know that there are two basic conditions, and if any one of them is satisfied, then you say that the assessee is a resident. Correct. So we have two basic conditions. Please write it down. Basic conditions. And if any of them get satisfied, then we say that that individual is a resident. So basic conditions actually tell us whether the assessee is a resident or a non-resident. So if none of them is satisfied, then non-resident. So this is, you can also write it that if none is satisfied, then this person would be a non-resident. But at least if one is satisfied, then resident. And we know what are the basic conditions. First is that the assessee should be in India for at least, for minimum 182 days stay in during previous year. So at least this person should be for at least 182 days during the previous year. This is the first condition. If it gets satisfied, we will not even check the second one because we need any one of them. If this is not satisfied, then we will look at the second one, or the second condition is that this person should be in India for minimum period of 60 days in previous year. We'll write in short 60 days during the previous year plus, see, second condition has one more thing, 60, just not 60 days, plus he should be here in India for minimum 365 days in last 4 years, last 4 preceding years. So our previous year for our examinations, for May 25 examinations, we all know that the previous year is 24-25. So in this year, at least he should be minimum 60. If he is not even 60, we will not say, we will say no. So at least he should be minimum 60 in this year. And in the last 4 years, if we will go, so this person, the total of last 4 should be 365 or more. Everybody, first of all, tell me, have you all written this? Yes or no? Very good. Very good. And guys, I would highly request, please keep on responding. Please keep on responding. So I should know that, yes, you are listening. And if you will keep on responding also, so you would also be alert, right? And sometimes I will actually point out a name. So that person has to answer also, right? And don't get afraid. Even if you can't able to answer, that is perfectly fine with me. But at least you should be alert. So keep on responding so that I should know that I'm teaching to someone. Okay. So this we all know. But a very important point is that for some people, we don't take these conditions. For some assessee, there are certain assessee, we know that there is exception. There are certain assessee for whom we take only 182 days condition. If he or she is there for 182 days, then okay. If less than 182 days, that is 181 or less, we will say no, you are a non-resident. For some assessee, we don't look at in both the condition. We consider only one. Only this condition to be considered. We never consider this condition for them. And this is quite important for examination purpose. So there are 3 exceptions to it. That 3 classes of people will not be, the 60 days condition will not be applicable to them. So what is the exception of this? So we have second condition, we have exceptions. So if the assessee, your question tells us, will tell you that your assessee falls under this exception, so please only apply 182 days condition. Don't apply 60 days condition. So the first exception is, if the person is a crew member of Indian ship, if he's a crew member of an Indian ship, first class of person, crew member, you all understand, staff member of an Indian ship. Second exception is, if the person leaves India during the previous year, he left India, which is very important. When he left 2 years back, 3 years back, 4 years back, no. He left India during the previous year. Our previous year is what? 24-25. So if he left India during this year, he left India during, I'm writing it in bold letters, during previous year. So for us, the previous year is previous year 24-25. Guys, if he is leaving outside India during this year, it is very important. Then it will be under exception. So if he left India in any other year, so second exception will not be covering. Although third exception might be covering, but not the second one. Second one would only be satisfied if he left India during this year. So left India during the previous year for employment outside. for employment outside. And guys, employment also includes business outside, business or profession outside. So employment here doesn't just mean he's went outside for a job. He can went outside for a business or a profession also. Guys, what does it mean for employment outside? See, if I talk about regarding salary, if I talk with reference to salary, so it means that now he will get a salary from a foreign employer. Now his boss is a foreign employer. He will now get salary in pounds, in dollars, in euros. So that is called employment outside. So if somebody has job here in India, so let's say if this person is working here in India with KPMG, let's say he's working with KPMG Bangalore. So this assessee, let's say, is working with KPMG Bangalore. And if KPMG Bangalore, see who is the employer? KPMG Bangalore, right? So if KPMG Bangalore has sent him, let's say to London for 2, 3, 4, 5 months or for 1 year also, who has sent it? KPMG Bangalore. So to work there in London, they have sent it on a project for 1 year. He will go and he will come back. So does he went outside for employment? Does he went outside in the search of employment? No. Who is the employer? The employer is KPMG Bangalore only. The employer is not a foreign employer. Agree? He will get salary in Indian rupees only. So he went outside for the purpose of his job, not to get the job. Now his salary is not coming from London. His salary is still coming from Bangalore. So he is not under this exception. Have you understood? Yes or no? Everybody, yes or no? Good. Second example, very good, Aditya, Joseph, Shagna, Logita, Satish, Akshay, very nice. Second exception is, let's say he's working with KPMG Bangalore and now KPMG has sent him. They have transferred him to KPMG New York. Now they have transferred this person to its another branch. Now please tell me, now he will get salary from where? KPMG New York. He will get salary from New York. This is called employment outside. So even you are transferred to another branch. Now you are an employee of which company? You are employee of KPMG New York. This is employment outside. So this will come under exception. The second exception is left India for employment. If you left India for any other purpose, let's say for example, you left India, the assessee left India for study purpose. He's doing MBA. So he went outside for study, not for employment. Although he might be, while doing his MBA, he might be doing a part-time job over there. But that doesn't mean an employment outside. Correct? So he went there on a student visa, not on a work visa. Third, if a person, he generally stays outside India. If a person generally stays outside, so he went outside India 2 years back, 3 years back, 4 years back, and now generally this person stays outside. And now he or she is coming just for a visiting India. He or she is visiting India. For a few days they are coming for, let's say their relatives are here to meet their family, they are coming. So they generally stay outside and they are coming to visit India. Now guys, these 3 points are very important. But the most important point over here is that these 3 exceptions, all these 3 should be an Indian citizen. This is very important. And I'm telling you that if you know this, then most of your questions would be correct. Guys, these exceptions, under all these 3 points, there is a common point that all these should be Indian citizen. So if there is a crew member of Indian ship and that person is not an Indian citizen, not under exception. If a person left India for employment outside, but that person is a foreign citizen, not under exception. If a person generally stays outside India and visits India and he is not an Indian citizen, not under this exception. So instead of writing Indian citizen, Indian citizen who is a crew member, Indian citizen who left India, Indian citizen who generally stays outside India coming to visit India. So I have specifically mentioned to you that all these three things would be applicable to Indian citizen. So guys, shortcut in your examinations, whenever you will find that there is a question which is starting like Mr. So and so or Miss So and so is a foreign citizen, she's a US citizen, Sri Lankan citizen, any other country citizen. Guys, in that case, both the conditions will apply. These exceptions is for only Indian citizen. And mostly 70-80% cases will get the question of Indian citizen only. But yes, in case of foreign citizen, please don't waste your time in looking at these exceptions. These exceptions are only and only for Indian citizen. Yes or no? Everybody got it? Second point. Only third one. Third one has little more. In third one, it could be Indian citizen also or person of Indian origin also. So in this third one, here is little bit extra. So here also person of Indian origin. Also person of Indian origin. PIO. Person of Indian origin. So who is a person of Indian origin? We know that whose parents or grandparents are born in undivided India. Everybody knows it now. Whose parents or grandparents are born in undivided India. So if this person is not an Indian citizen but PIO also, then third one, very good, Deepa. So in that case, third one would be satisfied if this person is not an Indian citizen but PIO. Everybody has done this or not? Very good. Very good. Now, we have two special provisions also. We have two special provisions also. Please write with me. We have two special provisions also. And you will apply these special provisions if in your question the information of income is also provided. I'm again repeating. Please apply these special provisions if the information of income is provided. If income information is provided in your question. Guys, because there could be multiple types of questions. Actually, the second type of questions would be they are just telling you about number of days this person came India on this date, he went outside India on that date, so and so. They are only talking about number of days of stay. In that question, there is nothing like income. There is no information regarding the income of that particular person. So in that case, you don't worry about the special provisions. Please don't apply any special provisions over there. You just apply your basic conditions. Correct? Okay. Guys, I forgot to mention you. Okay, let us discuss additional conditions also I have to tell you. Okay, you can cut the line right now. First of all, write additional conditions. I'll be discussing special provisions after this. So you can cut. First of all, you should write additional conditions about them. Additional conditions. 2 lines you have to write. So if this assessee is a resident, then we have to see if additional conditions will tell us ordinary or not ordinary. If the assessee is a non-resident, we don't have to go down there. But in case the assessee is a resident, then we have to find ordinary or not ordinary here. So if both our conditions are satisfied, then this person would be a resident and ordinary resident. If both are satisfied. So additional condition 1 is last 7 years. Last 7 years means preceding the previous year. Last 7 years minimum 730 days, and both the conditions should be satisfied. And out of last 10, 2 years, out of last 10 years, he should be a resident. That's it. Guys, I'm not saying ordinary or not ordinary. That person should just be a resident. In how many years? In last 10 years, at least 2 years, that person should be a resident. And in case these both the conditions are satisfied, if in case both the conditions are satisfied, then this assessee would be ordinary. In case first is not satisfied, so don't look at the second one also. The first one is 730 days. So just count 730 days. If it is 730 days or more, then first condition is satisfied. But if it is less, then first condition is not satisfied. Don't look at the second condition. Why? You need both of them to be satisfied. So if 730 days is not satisfied, directly say that the assessee is a not ordinary resident. So additional conditions tells us ordinary, not ordinary. If this is also satisfied, this is also satisfied, then ordinary. Otherwise, any of them is not satisfied, not ordinary. So this was easy actually. Now come to the special provisions. The special provisions you have to apply only and only if the income information is provided. If the income information is provided, and if Indian source income is more than 15 lakh, not equal to, it should be more than 15 lakh, then special provisions are applicable. If the Indian source income is more than 15 lakh. Guys, what is an Indian source income? Please write it at the side of your page. What do you mean by Indian source income? Indian source income is any income which arise in India, any income which is received in India. Guys, in other words, I can tell you what is Indian source income. Indian source income, please write it down. Indian source income means any income which has connection with India, which has a little connection with India. That is called an Indian source income. It should have a connection with India. Either it is arising in India, that is an Indian source income, or it is received in India, that is an Indian source income. Although it is not arising in India, but it is received in India. It has a connection with India. Third is very, very important. Third is in fact very, very important. This is important. This is also Indian source income. It is neither arise nor receive in India. It is neither arising nor received in India. Then sir, why it has a connection with India? The connection is that it is only controlled from India. But controlled from India. That is also an Indian source income. It has also a connection with India. Why? Because this income is controlled from India. Please remember these three things. So if the total of this Indian source income is more than 15 lakh, then you will apply the special provisions. Then you will simply apply the special provisions if the information of income is also given to us. See, because this special provision can only be applied because it is based on income of the assessee. So if in the question income is not given, don't apply special provisions. Have you written this? Have you understood this also? What is Indian source income? I will be discussing with the question right now. So any income which arises in India, wherever received, arise, Indian connection. Received, Indian connection. Third is, it is not arising in India, not received in India, but controlled from India. It is also having an Indian connection. Guys, any income which is not arising nor received, neither controlled from India also, that is not an Indian source income. We will not look at it. So we will look at only those income which has Indian connection with it. Very good. Look at the people. Satish, very nice. Okay. Now, if in your question you will find that the income information is also given, then you will see that whether the Indian source income is more than 15 lakh or not. And if it is, then we have two special provisions. Special provision number one. You don't have to remember the section number, not required. Special provision number two. Provision number one. Guys, one thing is again common. That these people should be again Indian citizen. One thing is very common again. Special provision would be applicable again to Indian citizen. See how important this word Indian citizen is. In exceptions also, I told you that Indian citizens are only covered. But yes, in the third one, PIO is also covered. Under these special provisions also, please do not apply special provisions on non-Indian citizen. Again, I'm telling you, it will save a lot of your time. Unnecessary, students waste their time. They apply special provision, they get confused at whether this special provision would be applicable or not. No, if the assessee is not an Indian citizen, never apply the special provisions. So special provisions are again applied only on Indian citizens. So they should be Indian citizens. Special provision number one, here PIO is also included. So it could be Indian citizen. IC, I'm writing for Indian citizen, or it could be PIO also. Person of Indian origin also. If he is not an Indian citizen, PIO chalega. PIO would also be considered. Special provision number two. Special provision number two, only Indian citizen. No PIO. Everybody done till here? Only the last thing is left, then we'll move towards the question. Very, very good. Very good. Good. Special provision number one. It says, see, now we understood first of all, as of now, two conditions were satisfied. First of all, the Indian source income should be more than 15 lakh. It is satisfied because then only we can come to this special provision. Second is this person is either the Indian citizen or person of Indian origin in special provision number one. This is satisfied. Now we'll look at it. If this person is visiting India, and see, first of all, because this person is now visiting India, he generally stays abroad. So if there would be no special provisions, then actually this person would have been under this exception because generally he's staying abroad and he's coming to visit India. So otherwise, if this special provision would not have been there, I would have applied only 182 days. I would not apply 60 days on it. But now the special provision is saying now apply this condition also with little modification. So for them, they have modified something. They said the people who are visiting India, either the first condition is minimum 182 days in previous year, minimum 182 days or previous year, or B, minimum 120 days in previous year plus 365 in last 4 years. So with this special provision number one, since so your question will say that this person is an Indian citizen, he comes to visit India. So whenever he say he comes to visit India, so our mind will go to exceptions. That 60 days we will not apply, 60 days we will not apply, we will apply only 182 days. But if the income information is also available and you find that the Indian source income is more than 15 lakh, then please apply this special provision. You will be getting this clarity when I'll be discussing the questions with you. Now, minimum 182 days in previous year and 365 days in the last 4 years. If any of them satisfied, we will make him resident. We will make him resident. And now ordinary or not ordinary. This is very important, guys. Students again waste time. To check ordinary or not ordinary, will you go to these additional conditions? No. To check ordinary, not ordinary, special provisions have their own method, own rules. So if you are applying a special provision, please never see this additional conditions to check ordinary 7 years, 730 days, 2 out of 10 years. No, that is only for non-special provisions. That is only for non-special provisions. So for special provisions, if the person does not satisfy this, simply non-resident. But if he satisfied anyone, so he might be satisfying this at least 182 days. Or let's say he is not in 182 days, but at least 120 days and 365 days he is satisfying this. So just ask that which one condition is satisfied. Is this satisfied? If this is satisfied, then we have our own special rule here. If this is satisfied, he would be an ordinary resident. What does it means? It means that if the stay is 182 days or more, he will become ordinary. But if 182 days was not satisfied, but this was satisfied, see, at least one of them would be satisfied, na? Then only he will become a resident. If none of them will be satisfied, simply non-resident. So at least I think that one of is getting satisfied. That is the reason this person is resident. So if this is satisfied, ordinary, and if this is satisfied, if this is not satisfied, but this is satisfied, then he is resident, although, and how, and which one? Not ordinary. Not ordinary. So please, to check ordinary or not ordinary in case of special provision, please don't look at those two old additional conditions. No, that is for normal provisions. For special provisions, we have our own set of rules. So if this person is getting resident by this set condition, then he is an ordinary. If this person is getting resident by this condition, then not ordinary. Special provision number 2. Only Indian citizen. PIO is not there. I'm writing it. Not PIO. PIO is not there. Specifically, I'm writing it not PIO. First of all, see, when I will come to special provision number 2, first of all, this person should be an Indian citizen. Second is Indian source income should be more than 15 lakh. Then I'm coming it over here. In this case, if this person resides in such a country where there is no tax, that we call tax havens. Guys, if it is mentioned in the question that this place is a tax haven or this place there is no tax, then only please consider. Don't apply your general knowledge that this is a tax haven, so let us do this. No, it should be specifically mentioned in the question. Let's say we know that Cayman Islands or British Virginia or Hong Kong, Macau, Mauritius, Dubai, they are tax haven. But this is how we know through our general knowledge, right? So if the question is specifically telling you that this is a tax haven or no tax country, then only apply this provision. Don't apply your general knowledge. Let's say it is given to you that assessee is residing in Dubai. But in the question, nothing is mentioned regarding the fact that this is a tax haven or Dubai is a no tax country. Nothing is mentioned. So don't apply your general knowledge. Apply what is the fact given in the question. Got it? Although we understand in Dubai there is no personal taxation, but we will not apply our general knowledge. It should be mentioned somewhere in the question. So if he is residing in such a country where there is no tax, then in that case, he will always be, and his Indian source income, and obviously his Indian source income, his Indian income is more than 15 lakh, then we call him deemed resident. Then we call him deemed resident, and deemed resident, just write deemed resident, and after that you should write that deemed resident is always not ordinary. Now let us apply all these concepts in our question now. Everybody finally done? So I am believing right now that if at least not 100%, at least 60% you have understood this much. 40% I am believing that you have not understood. So now we'll be applying everything. Correct, na Satish? Correct. I know. Whatever I have written, 60%, 50, 60% you must be knowing it. 40% you have not understood. I'm believing this. So let us apply all these concepts in the question. See, Gomti, Kishore, everybody is saying yes. Now let us apply all these things in the question, and then let us, after 2 or 3 questions, make it 100%. Right? Today we have to make it 100%. Now, look at the screen, guys. Everybody look at the screen. Shruti is an Indian citizen. Note, she is an Indian citizen. Okay. Is currently in employment with an overseas company located in UAE. She is currently located in UAE. Right? Whether UAE is a non-tax country, we don't know. We'll not apply our brains, we'll not apply our general knowledge. If it is given in the question, then we will apply. Correct. So she is currently in employment with overseas company in UAE. Guys, after reading this first line, can I say that she went outside during this year? Yes or no? Can I say that she went outside during this previous year? Yes or no? Just read the first line. Can I say that she went outside during this previous year? Vaibhav is saying no. Logita, Shagna, Deepa is saying yes. Guys, where it is written that she went outside during this year? Where it is written? In the first line, where it is written that she went outside during the previous year? Nowhere. Can we say that she went outside during this current year? She might went outside during last year, last to last year, 3 years back, 4 years back. So where it is mentioned that she went outside during this previous year, the answer is no. So we can't say that she went outside during this. It is written that currently. See, if your cousin is right now in Chicago, and somebody of your relative today asks you that where is he? So what you will say? That currently he's in Chicago. That's it. Currently he's in Chicago, and might be possible he went Chicago 10 years back, 20 years back, 5 years back, 4 years back. Everybody okay with it? Nowhere it is written that she went outside during this previous year. During this previous year. What is our previous year? Previous year 24-25. No, nothing is written. Everybody understood? Shagna, Teepa, Logita, got it? Again, I am repeating. Shruti is very good. Shruti is an Indian citizen. Okay, good. Currently employed with an overseas country. Good, no problem. Now, during the previous year 24-25, she comes to India for 157 days. She is coming to India for 157 days. Guys, as of now, I understood. She is an Indian citizen. She generally stays outside India. She is coming for a visit. As of now, I understood that she is falling under this exception. Say yes or no. Generally stays outside India. Exception is applicable for Shruti. As of now, I know, and this exception is under normal provision, not in special, right? So as of now, after reading this, I understood that she is under exception. So we will see only 182 days. Everybody agree till here? Say yes or no. We have to make that 60%, 100%, right? Agree now? Got it? Good. Now, she comes to India for 157 days. So guys, if I'll apply this condition would not be applicable. Even this condition is not satisfied. Why? Because she was here in India for 157 days. So 180 days is also not satisfied. So till here, by reading these two lines, I'm getting in my mind that she is a non-resident. Say yes or no. Have you understood why I'm calling her non-resident? Say yes or no, everybody. Correct? I have not read the questions further, but till here, I got the idea that she is no non-resident. Very good. She is in India for these days for the last 4 years. Last 4 year information is available 200, 100, 76, 45, whatever. Her annual income for the previous year is as follows. Guys, his income is given. What I told you about income. If the information is income is given, what I have told you. Tell me what I have told you. That we have to apply special provision. Very nice. That we have to apply special provision. Got it? So in this question, by reading the first two lines, I was just applying the normal provisions. But since now I read it further and I came to know that income is also available, I will not waste my time in the normal provisions. I will not write anything in my examination with respect to normal provision. I will write only special provisions. Okay. Guys, special provision will apply when income information is available. Okay, good. But her Indian source income should be more than 15 lakh, then only special provisions can be applicable. If the Indian source income is not more than 15 lakh, then I will not apply this, only normal would be applicable. Yes or no? First of all, let us see. What is an Indian source income? Let us see. Guys, first one, income from salary earned and received in UAE. What do you think? Indian source or not? Yes or no? Very good. No. So I will not include this in 15 lakh. Good. Very good. Very good. Second, income earned and received from a house property situated in UAE. UAE house property. Neither arising in India, nor received in India, neither controlled from India. Very, very good. No. Income deemed to accrue or arise in India, 5 lakh. Very nice. Include. Very nice. Include. Okay. Now, fourth one. Income from retail business accrued and received outside India, controlled from India. Very good. Very good. Very good. Everybody. Very good. So nice. Guys, keep on responding to me during the entire class, during the entire next 10 days. Very good. 10 lakh. Income accrued and arise in India. 3 lakh. Okay. Everybody got it? Life insurance premium paid by check in India. LIC. Is that an income? Is that an income? No, it's not an income. It's a deduction. Okay, no. First of all, now it's not an income. 5 lakh, 10 lakh, 3 lakh. How much it is? I will not include 2. I will not include 5. So it comes to 18 lakh. Can I say that the income from Indian source is more than 15 lakh? The answer is no. I cannot say right now. I cannot say right now because we need total income. What is total income? Although I have not discussed this chapter deductions, I will be discussing with you on day 5. But deductions. So after deductions, we have to see. So in this case, first of all, LIC premium, guys, I know that some of you might be knowing it, some of you might not be knowing it. LIC premium is deduction is available under 80C only under optional regime. only under optional regime, not in default regime. So first of all, let us read the question also. Determine the residential status of Shruti. We need to determine the residential status of Shruti. For assessment here, this, support your answer with computation. Also support your answer with the computation that why you are doing it. Assuming she has opted out from the default text regime. She has opted out. Opted out means which regime she is following? Optional. So although I know that you have not done, but still, very good, Logita, she is following optional. So I know that we have not done deductions as of now, but you might be having a little bit idea. If don't, no problem as of now. So we will allow this deduction. And after this deduction, her income would be after 1.5 lakh, her total income is 16.5 lakh. Now I can say that her total income, Indian source income is also known as other than foreign, because whatever is other than foreign is Indian. Agree now? So we can use the word it is exceeding. If it is exact 15 lakh, no. It should exceed 15 lakh. It should exceed 15 lakh. Everybody is okay till here? Now tell me, when you will start this question, will you start with the normal provisions or directly with the special provisions? Tell me. In your examination, when you present it, will you start this question with the normal provisions, or it will be, Joseph, I'll tell you, you would directly start with the special provision, directly with the special provision. We will not waste our time in normal provision. Unnecessary, it is wastage of time. You will not get any extra marks. Unnecessary time would be wasted. So whatever the provision is applicable, you have to tell the examiner, I am applying this provision. Agree? Joseph has a question, although it is related to ATC, but still he has a question that says if LIC premium is paid outside India, then is it allowed? The answer is yes, it is allowed. LIC premium paid even in India or outside India. So in ATC, nothing is mentioned about it. So it is actually allowed even if you are paying outside India. Now, guys, how you will start your questions? Especially these types of questions where you need to determine the residential status. So the method should be, if you want to get full marks, the method should be, first, give the provision to the examiner. You have to write the provision. Your complete answer should be, first you should give the provision, that which provision you are applying. Guys, here, no need to mention the section number. If you know it, you can mention. But if you perfectly know it, then only mention. Otherwise, don't mention. Because if you mention the wrong section number, he will cut your entire question. Even if your entire question is correct, but if you mention wrong section, he is going to cut your entire question. So if you are 100% sure, then mention the section number. Otherwise, no need. You will not get any extra marks to mention the section number, guys. Okay. Provision you should make. And how you should write the provision, guys? Write the provision in short and simple language. No requirement of legal provisions, no requirement of legal language. Please write the provision in short and simple language. Second, write the facts of the question, that how your provision is related to this question. Write the facts of the question. I'll be explaining you how we will be writing it. Third is your conclusion. And guys, everything should be written in a simple English, not any legal language. Have you written it? So your question, such type of question, even your tedious questions which require that you have to write theoretically something. So in that questions, you should apply your provisions, facts, and then the conclusion. Generally, you will find in residential status, you will find in TDS, TCS question, which comes of 6 marks, 5-6 marks. You have to follow this. Now, everybody with me. Solution number 1. What the question is asking from us, determine the residential status of Shruti. Determination of residential status of Shruti. Assessment year 25-26. Directly write the provision. If an Indian citizen if an Indian citizens if an Indian citizen visits India and the Indian source income you can also write Indian source income like other than foreign source, which is other than foreign source is Indian, correct? Or you can also write other than foreign source. So if an Indian citizen visits India and the Indian source income, that is other than foreign source income, exceeds rupees 15 lakh, such individual shall be resident if such individual shall be resident if first condition stay in India during previous year is 182 days or more, or one 120 days or more, 120 days or more in previous year and 365 days or more in last 4 years. Guys, first part you have done, the provision you have discussed. First part you have done, the provision you have discussed. In this question, let me know if you have done this till here. Very good. Very good. In this question, Shruti is an Indian citizen and Indian source income is more than 15 lakh. They have asked you, please give the computation also, that how you are determining the residential status, give with computation. So our Indian source income is more than 15 lakh. So how we find that it is more than 15 lakh? So we have to write it. Income deemed to accrue or arise in India 5 lakh. We'll write in short. We'll not write these complete sentences. Income arise in India. Five lakh. Income. Will not write the full sentence. See, here it is written. Income from retail business, accrued and received outside India, controlled from India. Only I need controlled from India. So business controlled from India, 10 lakh. business control from India, 10 lakh. Then income accrue and arise in India, 3 lakh. Income arise in India was 3 lakh. So our GTI is 18 lakh less deduction 80C 1.5 lakh is paid. So it is 16.5 lakh. So I'll write Indian source income is 16.5 lakh. So where I have mentioned that it is more than 15 lakh, we have given the computation also. Everybody agree? Now, facts. Now we need, so we understand that special provision is applicable to her. Now, what is the special provision? For we need the number of days. See, we will not write every time these things to duplicate. We simply will write number of days of stay in India. Stay in India. During previous year, 24-25, I believe 157 was given. Correct. 157 days was given. Na? $157. Last 4 years, they have given the information also of the last 4 years. See, last 4 is 23, 24, 22, 23, 21, 22, 20, 21. Last 4 years is 200 plus 100 plus 76 plus 45. 200 plus 100 plus 76 plus 45. How many guys? 200 plus 100 plus 76 plus 45. 4 to 1. Very good. Very good. Aditya, Deepa, 4 to 1. Now please tell me, guys. Now please tell me. Is she, both the conditions are applicable to her? We understood the special provisions. Now, very good. Whether her stay during the previous year is 182 days? No. Now understand, please make that 60%, 100% right, guys. Whether her stay in the previous year is 182 days, the answer is no. Guys, if the stay is 182 days or more, then I would have said her resident, ordinary resident. Understood? But right now, Satish got it? So right now, this person is applicable 120 days. Why? 157. 120 days is applicable. In the last 4 years, it is also more than 365. 365 or more. Yes, it is there. So if the person satisfies this condition, so how we will determine ordinary, not ordinary? We know that we will not go to those additional conditions, 730 days in last 7 years, 2 out of 10 years should be resident. No, we'll simply say that this condition is satisfied, then it is not ordinary resident. First of all. Now the conclusion point. See, we have given the provision. We have given the facts. Now the conclusion time. Since her stay is more than 120 days, or even 120 days or more are also there, more than 120 days in previous year and 365 days or more in last 4 years. Therefore, she is resident in previous year 24-25. So you have to write also that in which year she is resident. She is resident. And now if she would have been non-resident, I would have stopped here. But in case the assessee is resident, then I have to go one more step down to check ordinary or not ordinary. Then how I will write? I will not write like this, that since second condition is satisfied, so not ordinary. This is our way of understanding it, right? Simply, you have to write since her stay is less than 182 days in previous year 24-25, therefore she is resident but not ordinary in PY 24-25. Have you all understood it or not? This question at least 100% got it. Very good. Very, very good. Very good. We also, these types of questions are also important where they gave you certain particular income, and they actually tell you, they ask you to compute the total income of the assessee. If he is resident, ordinary, if he's not ordinary resident, if he's a non-resident. These questions are also very, very important, prime important. So how we should determine? We should know. This is known as scope of total income. Please write with me. Scope of total income. What does it mean? Scope means that what kind of income can be taxable. What does scope mean? Scope means that Indian government, Mrs. Nirmala Sitharaman, has how much scope, that whether she can tax that income or not. Scope means that whether this income is taxable in India or not. Whether that income is taxable in India or not. This is known as scope of income. Got it? See. If any income, first one, if any income arise in India, or we also said deemed to arise. What is deemed to arise? I'll be discussing with you. Any income which arise in India, or any income which is received in India. If it is not arising, however, it is received. And I believe everybody know what is received. Received means directly you are getting this income in India. Guys, if somebody does not know the difference between receive and remittance, please let me know. Please let me know. I would be happy to explain. No problem. Everybody understand the difference between received, directly received in India, and remittance? If somebody doesn't know, please let me know. Very good. See, receipt means when you directly receive this money in India. Remittance means if you have already received it outside, now you are just transferring it. That is not received. That is just a remittance. Very good. Guys, any income which arises in India, or any income which is directly received in India, on these type of income, we have full control. this is in our scope. We will not even ask you whether you are resident, you are non-resident. We will not even ask you. Your residential status is irrelevant for these two types of income. So for these two types of income, you should have no confusion. The residential status of the assessee is completely irrelevant. Whether this income, if this income is arising in India, we have the full scope. Mrs. Nirmala Sitharaman will say, I have the scope to tax it. If this income is not arising, but it is received in India, she will say, I have the scope. Assessee will say, I am a non-resident. We don't know what. We don't care. Your residential status is completely irrelevant. So if you are resident, non-resident, if you are resident, non-resident, doesn't matter to us. This is always taxable. But if third one is, if the income is neither arise nor received in India, if this income is neither arising nor received in India, then Indian government might not have control in some cases, because this income is not having any Indian connection. It is neither arising nor received in India. So only for this particular thing, only for these things, it depends on residential status. This income actually depends on residential status, which that income which is neither arising nor received, this depends on residential status of the assessee. Okay. So we have two types of assessee, resident or non-resident, and resident are further divided into ordinary, not ordinary. So in our examination, I'm particularly targeting the examinations, right? So in our examination, we will be getting certain incomes. If we find that that income is arising in India or received in India, close your eyes and make it taxable for everybody. Close your eyes means don't consider the residential status, make it taxable. First two will always be taxable. So if the assessee is, see, resident or non-resident, two parts, but resident is again divided into ordinary and not ordinary. So this is resident, ordinary resident. This is resident, not ordinary resident. And this person is non-resident. So any income which arises in India, your residential status does not matter. It is always taxable. It is always taxable. Whether this income is received in India, residential status does not matter. It is always taxable. But if the income, the third point, if the income is neither arising nor received in India, see, you understand, for ordinary resident, global income is taxable. We say that for ordinary resident, please write it, we say universal income, global income is taxable. So if you are an ordinary resident, even if this income is neither arising in India nor received in India, still you have to pay tax. Guys, non-resident will never pay tax. Non-resident will say, logical, don't learn it. Non-resident will say that why I should pay tax. This income is neither arising nor received in India. Why I should pay tax? I'm unrelated to India. Correct. Guys, not ordinary resident, the second one. This is important and easy. Important, at the same time, I'm calling it easy. Guys, if thumb rule, I'm giving it to you. Wherever you find that there is the word which is used as controlled from India, that, guys, this controlled from India is only relevant for not ordinary resident. controlled. Wherever you find controlled from India, please write it there. Wherever you find controlled from India, it is only and only applicable for not ordinary resident. See, ordinary resident, we don't have any issues. Ordinary resident, he will pay tax on everything. His global income is taxable. Whether it is controlled, whether it is doesn't control, doesn't matter to him. Everybody, yes or no? For ordinary resident, control does not matter. Whether it is controlled, not relevant. His global income is taxable. Agree? Non-resident, guys, never get confused. If that income is, see, if the income is arising, not or received, first two, it is always taxable. We have no confusion. Some students get confused here. They get confused that say the question is saying you that the assessee is a non-resident. Question will tell you that assessee is a non-resident. And this income is neither arising in India nor received in India, but controlled from India. Guys, assessee is a non-resident. This income is neither arising nor received in India, but controlled from India. Guys, non-resident is least bothered about this word controlled. For non-resident, cut this word. Don't need it. If it is neither arising nor received, simply say cut. He will never pay tax. Control word has no significance, has no relevance as far as non-resident is concerned. Understood or not? This is something which you need to mark it up. Everybody, I need your confirmation. Everybody, controlled word does not have any significance with respect to non-resident, with respect to ordinary resident also. Because ordinary is a poor guy in the sense that he has to pay tax always. Ordinary has to pay tax always. Whether it is controlled, not controlled, doesn't matter to him. So for him also it doesn't matter. For this guy also it doesn't matter. So it matters only with respect to not ordinary resident, if it is controlled from India. In that case, if the income is neither arising nor received in India, but if controlled from India, then the answer is yes. But if not controlled, the answer is no for him. So if for not ordinary, so what I can say, guys, only I'm telling you that this is important for you. In this entire thing, now, you will not make mistakes here. Certainly you will not make mistake here. You will not make mistake here. You will only make mistake here. And that too, for ordinary, you will not make mistake because for ordinary, everything is taxable. For even non-resident, chances are less because control thing, now you understood that control thing does not matter over here. But only control thing matter over here. This income, so he is a, now tell me, look at this. First of all, this one. He is a not ordinary. Now look at this one. This income is neither rising in India nor received in India. So he will say, okay, sir, I will not pay tax. Okay, you will not pay tax. Okay, guys, you don't pay tax. But if it is controlled from India, now you have to pay the taxes. So I believe everybody has done it. Let us do a question on it so that we can actually understand it better. Very nice. Very nice. Very nice. Guys, take a short break of just 7 minutes. Take a short break of 7 minutes. We'll be back at 9. Go take some long deep breaths, have some water. If possible, have a cup of tea or coffee. Go outside, look at the sun, take deep breaths, and then come back. Take a short break of 7 minutes. We'll be back at 9 a.m. Okay, guys, welcome back. Let us come to question number 5. Everybody, look at this question. Look at your screen. From the following particulars of income furnished by Ashutosh, age 65 years. Okay, his age is 65 years, senior citizen. Pertaining to the year ending 31st March 2025, compute the total income as per the optional regime for assessment year 25-26 if he is a resident and ordinary and or a non-resident. Although we'll be discussing with all three. So these types of questions are quite important from examination point of view. We generally see that examiner asks such questions. So they will give you certain income and they will asking you that if you are ordinary resident, then what should be your total income? If you are a non-resident, what should be the total income? I will also be discussing with not ordinary resident. Correct. Now we know. Please keep that in mind. Any income which is arising in India, it is taxable for everybody. Any income which is received in India is also taxable for everyone, right? So it is only that income which is neither arising nor received. That is might be for ordinary, obviously it will be taxable. For non-resident, it will not be taxable. For not ordinary, if it is controlled from India, then only it will be taxable. Okay. These are the certain incomes. The first one is capital gain on sale of land in Jaipur to Ramesh, a non-resident outside India. The consideration is also received outside Indian foreign currency. Now tell me, guys, this capital gain is in the sale of land in Jaipur. So this person has sold a land which is situated in Jaipur to any person. To any person, that person is resident, non-resident, doesn't matter. And the money is also received outside India. Tell me, what do you know that this income is arising in India or not? Everybody, please tell me whether this income is arising in India or not. Yes or no? Or if you don't know, please tell me don't know. If you don't know, please tell me don't know. Very good. Very good. Very good. Very good. Everybody, yes. Why it is arising in India? See, if there is any Indian assets, on Indian assets, if you earn any income, that is an Indian income. So the capital gain is on the sale of land in Jaipur. Tell me the assessee is resident or not, doesn't matter. This income is taxable in India. So how you should write it? This type of question, everybody with me. Solution number 5. Computation of total income of Ashutosh, assessment year 25-26. And always, guys, it is better to do this type of question in a column format. And we are following optional regime. This person is following optional regime. It is also given to us. This type of question, it is always better because they are asking that us that if he is an ordinary resident, what would be his taxable income? Is if he is a non-resident, although I am discussing with the third one also, not ordinary. So this type of question, I always recommend, please make the columns for that. So right now I'm making 3 columns. One is for resident, if he is an ordinary resident, resident but not ordinary resident, and non-resident. In this case, in this case, Pradeepa, you have joined now? No? Okay. As of now, although a little bit which you have missed, Pradeepa, am I audible to you?
Yes, sir.
Good, good.
Yeah.
So, although I've discussed something regarding the residential status in
Okay.
the last 1.5 hour, so don't worry. Whatever you have missed, you can get the recording. You will get the recording by evening, so you can cover up over there. But right
Okay.
now, from here you can start. So I'm discussing one of the question.
Okay.
So everyone, so this is the question where we are would like to calculate the total income of the assessee. So it is always better to make columns for them. So now the first point says, and we all discussed that this income is arising in India. Why? There is a capital gain on sale of land in Jaipur. So any income which arises in India is taxable for everybody. So it doesn't matter about the residential status. So how we will be writing in our examination? How we will be writing in our examination? Guys, we have to save time. So please don't waste time in writing the entire thing. No, don't waste time over there. Simply write. First is, so it was first is capital gain, land in Jaipur. That's it. You have to simply intimate to the examiner. You have to simply intimate to the examiner that why you are taxing it. That's it. You don't have to explain each and everything. See, examiner is not our student that we are explaining each and every point to them. We need to just intimate them that boss, I know that how to solve it. And see, by reading this capital gain land in Jaipur, it is giving an indication that it is arising in India. Correct? So in that case, whatever the income is taxable for everybody. So 1,50,000 rupees, 1,50,000, 150,000, 1,50,000, irrespective of the residential status. Irrespective of the residential status, it is always taxable. Pradeepa, I just discussed that any income which arise in India, it is taxable for everybody. Any income which is received in India, it is taxable for everybody. We all know because these two income, Indian government has full scope. Indian government has full power that they can tax any income which is arising on Indian land. They can tax any income which is received in India. But any income which is does not arise in India nor received in India, Indian government doesn't have that much scope. So it is only because of this third point our residential status is relevant. Regarding these two, arise in India, reside in India, residential status does not matter. Whatever your residential status of the assessee is, doesn't matter. It is always taxable. But any income which is neither arising nor received in India, for that residential status matters. See, for ordinary, it is always taxable. You understand, global income is taxable. Non-resident will never pay tax on any income which is neither arising nor received in India. But not ordinary. I was telling before the break that whenever you will see this control word, controlled from India, have you seen now so many times controlled from India? This control word is only relevant for not ordinary. It is never relevant for non-resident. Control word is always has significance with not ordinary. So if any income is neither arising nor received but controlled from India, see for non-resident, simply say no. Control does not matter. If it is neither arising nor received, no. But for not ordinary, control matters. If it is controlled from India, then yes. If it is not controlled from India, no. Now, let us come back to the second one. Rent from property in Delhi let out at a branch of a foreign company. The rent agreement is entered outside India. Monthly rent is also received outside India. Guys, you have let out this property to some foreign company. The rent is also received outside India. What do you think? Is it taxable or not? 1,20,000. Is it taxable or not? Second point, everybody. Why? I just told you if you are earning anything from Indian assets, if you are taxing anything with regard to Indian assets, then every time it is taxable. Every time it is taxable. So it is arising in India. Why? Rent is from Delhi. Now, an important point. Guys, what is written over there? Is it written house property income or is it written rent? First of all, tell me, is it house property written over there? Is it written like house property income? or it is written as rent? It is written as rent. Although I will be discussing with you house property tomorrow, however, please understand that in house property, income is, because this question is asking us to compute the total income. So this is actually a house property income, and we know that if this would have been written like this, house property income from Delhi, I would have assumed that it's a computed income. But if it is written rent, then it is actually a GAV, and at least from GAV, you should deduct 30% standard deduction. So 1,20,000 is taxable for all, but this is not the computed income. So very good, Aditya. So in that case, we have to give standard deduction over here. So please make sure that what it is written, is it house property income written over there or rent is written over there? So if rent is written over there, that it means that you have to compute it first. So your house property income would be 1,20,000 minus 30% standard deduction. Everybody understood this or not? So you will simply say, this is, right in short, this is actually house property income from India, and it is taxable for everybody. So what you will say, your rent is 120, also call it GAV, minus standard deduction, simply 30%. Although I'll be telling you tomorrow that how house property will compute it. So minus standard deduction, 36,000. So the remaining would be 84,000. 84, 84, 84. Correct? Taxable for everybody. Why? Because it is arising in India. Third, agriculture income from land situated in Nepal. First of all, tell me, agriculture income is taxable or not taxable? Is it taxable or it is exempt? Agriculture income is taxable or it is exempt? Very good. Agriculture income is exempt. Guys, if it is exempt, then it is exempt for everybody. If it is exempt, it is exempt from for everyone. Either you are ordinary, not ordinary, non-resident, doesn't matter. Exempt income means exempt income, not taxable for everyone. But please remember, agriculture income which is coming from India, that is only exempt. If it is coming from outside India, it is not exempt. That income is not exempt. So agriculture income from a land situated in Nepal, tell me, it is an Indian agriculture income or outside? Outside. Only Indian agriculture income is exempt. If there is a land in India, we are doing agriculture, then it is exempt. But if it is a foreign agriculture income, it is not exempt. So this is actually a taxable income. Now, is it taxable for everybody? No. Now it depends on the residential status. Why? First of all, tell me, is it received in India? No. Received in Nepal? Is it arising in India? No. Whether it is arising in India? No. Nepal land. Whether it is received in India? They have said it is received in Nepal only. Neither arising nor received. Guys, neither arising nor received. What do you know about it? If this income is neither arising nor received, should I make it taxable? And I was telling you few minutes earlier that only with respect to this income, which is neither arising nor received, this is now coming in third point. My residential status plays a role. For these two, my residential status does not play a role. My residential status play a role over here. So this income, which is neither arising nor received, for ordinary global income is taxable, we will tax it here. For non-resident, we will never tax it. Even if it is control word, I will not look at for non-resident. So for non-resident, this is the income, it will not tax. And for not ordinary, if it is controlled from India, then it can be taxed, otherwise no. So in this case, there is nothing like control over here in India. So it is yes, no, no. Everybody tell me, got it or not? So it is taxable, Logita is correct. Only in case of ordinary resident, it will be taxable, not for them. So rental income from Nepal, agriculture income from Nepal. agriculture income from Nepal. It is not taxable for not ordinary non-resident. However, for ordinary, it is taxable 55,000. Guys, any doubt, I would be happy to answer. Tell me, have you all understood this or not? Third point. So please remember that agriculture income from India is exempt. See, if this would have been agriculture income from India, then what I would have done, tell me guys, if this would have been agriculture income from India, then for not ordinary, for ordinary also, what I would have done. Very good. Where were we? Exempt for all. In that case, it is exempt for all. In that case, it is exempt for all, but right now it would be taxable. Fourth, interest on saving bank deposit. Fourth, interest on saving bank deposit in UCO Bank, Delhi. Guys, what do you think? Is it arising in India? Where is the bank situated? In India. You are having and you are getting an interest from the investment which you have made in India. So it is actually arising in India. Everybody agree? So you have actually invested the money in India, in Indian investment you have made, Indian bank you have deposited. This is an Indian income taxable for all. Interest on saving bank account 18,000. Now, a very, very important point, although again, this point is related to deduction. Guys, whenever you will come across saving bank account interest, whenever we correct, whenever you will come across to saving bank account interest, and if the assessee is following optional regime, so please in your mind there should be a section 80 TTA TTB. Guys, what the question is asking from us, are they asking the GTI or the total income? They are asking the total income. So what is the total income? Total income is GTI minus deductions. And in optional regime, all the deductions are available. So there is a deduction 80 TTA TTB. I'll be discussing that also, although I have to discuss that in deduction chapter, but today I'll be giving you a hint also about it. So please always remember that there will be a deductions also. A mistake which I found that students does is they give a deduction right here. No, this deduction is given from GTI. So first of all, compute everything. Compute your GTI and then give the deduction. I'm again repeating. Students make a mistake here. Either they don't give deduction, that is a mistake. Second, they give deductions right here. No. And sometimes they don't even make it taxable. The third mistake is that I've seen in the test paper of many students, they never actually write this income. They say, sir, no, sir, there is a deduction available. So let us not write the income. No. First of all, make it your income. Then give deductions later from GTI. Everybody understood? So this is actually interest on saving bank deposit in UCO Bank, Delhi. So please make it your income, first of all. And you said it that it is arising for everyone. So it is arising in India. So it is taxable for everyone. So I'll write fourth point is saving interest from India. And it's taxable for everybody. First, make it your income. 18,000 is the rupee, the amount. First, make it 18,000, 18,000, 18,000. First, make it your income. Compute your GTI, and then we will give the deductions. Understood? Now, the next point. Everybody done till here? Are you all with me? Very good. Okay. Fifth point, income earned from business in London. Okay, this is a business in London. First of all, tell me arising in India or not. Don't read any other thing. Is it arising in India or not? The business is in London. No, it is not arising in India. Very good. which is controlled from Delhi, which is controlled from Delhi. 35,000 received in India. Right now, don't read this amount. Right now, don't read this amount. Guys, please tell me this 60,000 income, which is not arising in India, controlled from Delhi. Tell me where you will make it taxable. First of all, for ordinary resident ordinary, no doubt, yes. Everybody agree? For ordinary resident, everybody agree global income is taxable. This is neither arising nor received in India. For not ordinary resident, and for non-resident. Guys, now everybody please understand. For non-resident, control word does not matter. This income is neither arising in India, it is arising in London. Nothing is mentioned about received, so it means that it must be received in London only. So for non-resident, we will say no. Control does not matter. Control does not matter. Agree? For not ordinary, control matters. Control matters. So this income is neither arising in India. This income is in London, from London. Received also not in India. So for him, we will make it taxable. So guys, can I say 60,000 here, 60,000 here, and 0 here? First of all, tell me everybody yes or no. 60, 60, and 0. Everybody understood? So control word should not matter. Control word should not matter to non-resident. Control word only matters to this. See, for ordinary, everything is taxable. Very good. Very good. 60, 60, and 0. Now, let us read this also. See, 60,000, 60, 60, and this. Very, very important. Let us read this also, which I have cut. 35,000. Read this, what I'm highlighting. 35,000 is received in India. 35,000 is received in India. Please tell me now what changes you would like to make. 35,000 is received in India. What changes you would like to make? You tell me. So earlier it was, we have not read it. So it was 60, 60, 0. Very, very good. See, for non-resident, it should not be taxable. But since it is received in India, now it would be 35,000. Everybody understood this. Very nice. I believe you already have understood. You are giving me a correct answer. So it would be 60, 60, and 35. All clear? Okay. Fourth, fifth. Business in London. London business. You have to write in short. London business controlled from India. See, for ordinary, everything is taxable. 60,000 is taxable. For not ordinary, control matters. If it is controlled from India, either it is not arising nor received, but it is controlled, it matters. So 60,000 would be here also. And I should write for non-resident 0. But since it is received here, so at least 35,000 now he has to pay taxes also. Why? Because it is received here in India. So 35,000 he will pay taxes here. Sixth point. Sixth point. Gifts received from his daughter on his birthday. And how much he has received? 55,000. Again, a concept of IFOS. Whenever you receive gift for more than 50,000 rupees, so it becomes your income. I'll be discussing it after 2-3 classes in IFOS chapter. So how gifts are taxable. So this is gifts. But I believe that you might be knowing it that whenever we receive gifts from relatives, it is exempt. Up to any amount gift from relatives is exempt. So tell me, gifts received from his daughter on his birthday. Do you want to make it taxable for everybody or you would like to make it exempt for everybody? Because it is the gift which is received. Although I understand that this is point is related to IFOS chapter, which I'll be discussing after 2, 3 classes. Tell me, do you want to make it taxable for anybody or exempt for all? It is an exempt income. Gift receipt is exempt. So please make it exempt for everyone. So please make it exempt for everyone. So 55,000 doesn't matter the amount. If it is from daughter, that is relative, it is exempt for all. Gifts from daughter, exempt, exempt, exempt. So I'll not write, I'll show it and I'll write 000. Next, past foreign tax income brought to India. Past foreign income. These past year profits. Okay. It's very, very important point regarding this past year incomes. Guys, please understand. First of all, the question is asking you, and the question will always ask you that calculate the total income of the previous year. For a previous year is 24-25 for us. So here also they are asking us that for this year ended, compute the total income. So they are actually asking that whatever you have earned in the previous year, please tell me that what is your total income. First of all, please understand, you don't have to write it, just understand this. If you want to write it somewhere, you can write it, no problem at all. See, we are computing total income of previous year 24-25, correct? And first of all, if there is past year income, if there is a past year income, it does not belong to this year. First thing, it does not belong to this year, so you cannot make it taxable this year. To the year it belongs, it should be taxable in that year. It does not belong to this year. So whenever you will find this past year income, whether it is tax, untaxed, does not matter. If it is any past year income, and they are saying you that it is now remitted to India, it was not taxed earlier, doesn't matter. It does not relate to this year. So we will not consider this for anybody. Either you are ordinary, not ordinary, non-resident, doesn't matter. First of all, this income does not belong to this year. Understood? Second, let's say for example, it is 2 years, last 2 years income, or last 3 year income or so. For example, let's say, guys, we are doing this year, previous year 24-25. Let me give you an example. Let's say there is a past year income which belongs to previous year 21-22. And now it is after 2-3 years, now it is bringing into India. Should we make it taxable here? The answer is still no. Why? Because we don't know what was the residential status of the assessee in that year. We don't know that what was the residential status of the assessee in that year. Might be the possibility in that year he might be non-resident. This income was never taxable. So how you can make it taxable this year? So I've given you two explanation that whenever you will find your past year income, whether it is tax, untaxed, doesn't matter, please don't make it taxable. Why? First reason, it does not belong to this year. It belongs to some other year. Second, since it belongs to some other year, so we don't know what was the residential status of the assessee in that particular year. So we can't make it taxable. Everybody understood it or not? So they are saying that there is a past foreign tax income brought to India 37,000. Please don't make it taxable for everybody. Very good. Pradeep, Joseph, Satish, very nice. Lokita, good. Nitya, good. So seventh is past year income. It is not taxable. And guys, I'm telling you that you don't have to give so many explanations in examination. You don't have that much time. This question is hardly of 6 marks. So for 6 marks, we can spend maximum 8 minutes. So if you will be writing long explanation, it will eat up your time. Will not be able to complete our entire paper. So simply you have to intimate to the examiner. I would be telling you when we'll be doing the total income questions, you will understand that which particular note is required. But generally in these types of questions, generally don't waste your time. Simply write this, taxable, write the amount, not taxable, simply dash, dash, dash. Now we will not write it Here we'll give the explanation that past year income does not belong to this year. We don't know the residential status of the assessee. No, this is for our understanding that I'm telling you. Simply write past year income dash dash dash. Got it? Now, fees for technical services rendered to Shine Limited. Okay. What he has received? He has received some fees. Who is the assessee? Ashutosh is an assessee. So he has rendered some services. Fees for technical services rendered to Shine Limited, a foreign company, for business outside India and also received outside India. Tell me whether this income is arising in India or not. He has rendered services outside India. The money is also received in India. Is it income arising in India? No. Is it received in India? No. So does it belong to this category? Yes. Income neither arising in India nor received in India. It belongs to this category. Okay. Now tell me it is taxable for whom? Whether it is written that it is controlled from India, the answer is no. Nowhere it is written it is controlled from India. So either neither arising nor received in India. So this 12,000 is taxable. Very good. Or only for very good, very good, very good. Only for ordinary resident. For not ordinary and for non-resident, please don't make it taxable. So this is fees for technical services, 12,000 rupees. Fees for technical services outside India. Only here I'll make it taxable. Here I'll not make it taxable. Okay. Now we'll get the GTI. Now we will get the GTI. Can you please compute the GTI for me? Okay, I'm computing for ordinary. You guys compute. Some of you compute for not ordinary and some of you compute for non-resident. And tell me how much it is. GTI. Okay. People have given me for all three. 379 for this one is 3,12,000 and this is 2,87,000. Okay. Now we'll give deductions under chapter 6A. We'll give deduction under sections under chapter 6A. Although this is a concept of deduction chapter I would be taking in the later class, but still I think that you can understand about 80TTA and 80TTB. So please leave one or two line and write. Section 80 TTA, section 80 TTB. Just leave 2-3 lines, then you can write TTA and TTB. Guys, I tell you that earlier only this section was there. Earlier only this section was there. This section was introduced at a later stage. After a few years, after introduction of this section was introduced. So earlier only one section was there, TTA. For everybody, one section was there. This section is for, please write it. It is for individual or HUF, whether they are resident, whether they are non-resident. For everybody, this section was there. This section was only when you earn your saving interest, saving bank interest. So this section was there for only for saving bank interest, and it is for everybody, whether you are resident, whether you're non-resident. And how much deduction is available? The deduction available is whatever is the saving interest, or maximum limit is 10,000, whichever is lower. So only related to saving bank account interest deduction was available. If the interest is from fixed deposit or any other deposit, deduction was not available. Still, this section is like this only. Still, this section is like this only. It is available to individual HUF, whether you are resident, non-resident, saving interest, that's it. Not on any other interest, just on saving bank account interest. So that is the reason I was telling you that whenever you come across with saving interest, so please remember 80 TTA. Correct. But some people were not happy with this section. Some people were not happy with this section, especially senior citizen, because they were saying, sir, actually, we have interest income, but generally we have retired now. We are senior citizen, we are retired now. We have received some money at the time of retirement from our employer, and we have kept this money in fixed deposit or any other deposit. Sir, we don't keep our money in saving bank account. So our majorly interest is coming from fixed deposit, recurring deposit, or other deposits. Since your section is related to saving interest, sir, so it is not benefiting us. Senior citizens are telling this. So this section is also not that advantageous to us because mostly the interest which we get is from FD, etc. From other bank interest, we don't get saving interest that much. So this section is not benefiting us. So then government brought out another section that is called TTB. It is applicable for only senior citizen. They brought out one more beneficial section than this. And this is only applicable to senior citizen. And guys, you understand that whenever in entire income tax act, any benefit is given to senior citizen, it is given only to resident, not to a non-resident. Resident means wherever you find resident, resident means ordinary, not ordinary, both, right? So resident means ordinary or not ordinary, both. So this is for senior citizen if you are resident. And if you have any bank interest, any deposit interest, any bank interest, including saving also, including other things also. And the deduction would be A, your interest, your deposit interest, or rupees 50,000, whichever is lower. Just like this. So this is a beneficial section. Why? The limit has been increased from 10 to 50. One. Second, it is not just on saving interest, but it also includes saving interest and other interest also. Since this section is more beneficial, so if the assessee is satisfying these conditions, he is a senior citizen resident, then he cannot take both the deduction. No, he will be taking only this. If you are eligible for TTB, you are not eligible for TTA. It's not like that you can take both the deductions. Okay. Now, so saving interest is common here. In fact, there are more interest also, deposit interest. Now tell me guys, we have resident, ordinary resident. We have resident, not ordinary resident. Whether you are ordinary, not ordinary does not matter, but the assessee is resident. And in case they are senior citizen, then they will take 80 TTB. But if they are non-resident, irrespective of the age, if they are non-resident or they are resident but less than 60 years of age, they will take TTA. First of all, tell me, everybody understood this or not? Have you done it or not? Let me know if you have copied it. Now see, in my question, the assessee is 65 years of age. He's a senior citizen. 65 years of age. Now please tell me, since he's a senior citizen, and we have discussed it for TTB is for senior citizen, but for resident TTB is allowed, for resident ordinary, not ordinary doesn't matter, TTB is allowed, but for non-resident TTB is not allowed. Everybody understood? It is only for resident. So in this case, TTB will get here, TTB will get here, but here we will not get TTB, we will get TTA because TTA is for everybody. But here the maximum limit is 50, here the maximum limit is 10,000. So tell me how much was the saving interest? 18,000, 18,000, 18,000. Taxable for everybody. First make your income. Very good, Deepa. Now, deduction under chapter 6A. So we will get 80 TTA will not get here, we'll get here maximum 10,000. Why? 18,000 or 10,000, whichever is lower. And we will get 80 TTB. How much? Interest 18,000 or 50,000, whichever is lower. So 18,000 here and 18,000 here. Have you all understood this or not? So 18, 18, 10. Deeper, very nice. So I'm not having the space. So I think that you can subtract 379 minus 18,000. This is what total income 361. 312 minus 18, 294. 287 minus 10, 277. Everybody understood it? Have you done this? Very good. Very good. Now, guys, a very, very important concept on this. Generally, the question is asked section 9. Although if you don't remember the section 9, that's okay. If you don't remember the section number, section 9, that's okay. It is actually income deemed to arise in India. Income deemed to arise in India. So on this, actually, you get question. So that is the reason I would like to discuss this concept. Income deemed to arise in India. Let's say there is a, you can write this with me. Let's say there is a non-resident. Let's say there is a non-resident. You can write this with me, everything. His name is Mr. Paul. He's quite a rich assessee. He's quite a rich person. And he's a non-resident. He's sitting outside. Let's say he's sitting in New York. And we are doing business in India. And let's say I'm a resident. Let's say, and Paul happens to be a good friend of mine. So he is a good friend of mine. And I am a resident here. So I am a resident, Rajat. And I am doing my business in India. I am doing my business in India. For that, I require, let's say, 20 lakh rupees. For my business in India, in business, I require 20 lakh rupees. So I can take a loan. Since I have a friend, Paul, who is sitting in US, he never came to India, but he's my friend. I asked Paul, can you give me the money? He's in New York. I asked Paul, Paul, can you give me 20 lakh rupees I need in my business? Paul says, okay, you are my good friend. I can give it to you, but I will charge interest on it. And Paul says, I will charge 12% per annum interest on it. 20 lakh into 12% per annum, 2,40,000 rupees he will charge interest from me. So I am doing business in India. I am giving 2,40,000 rupees interest on 20 lakh. See, 20 lakh is not the income of the Paul. The income of Paul is 2,40,000 rupees, the interest which he's earning. So right now we are discussing that if a non-resident, please write this, if he earns an interest income, he's sitting outside. So whether that interest income is taxable in India or not, whether it is taxable in India or not. So let's say, please write it over here. For example, we have taken a loan. Of rupees 20 lakh at a rate of 12% per annum. So the interest would be rupees 2,40,000. Guys, I am talking about this 240. This is the income of Paul. Whether this income is taxable in India or not. Because what Paul will say, I am a non-resident. I have given the money while sitting in US. I have neither transferred the money in India. I have transferred this money to Rajat's account. Let's say Rajat's account was there in US. So Paul will say that I have transferred this money in US. Rajat is also paying me in US. I'm paying him 2,40,000 in his US bank account. So he's saying that my income is neither arising in India, I never went outside India. I'm receiving this money in India. I'm receiving this money also in US. So my income should not be taxable. So he will say like this. But we have section 9 that there are certain income which deemed to arise in India. So my point over here is whether this 2,40,000 is taxable in the hands of Paul or not. So I am making like this. So non-resident is Paul and we are the borrower. We are the borrower. These people are borrowers. The borrower can be resident. The borrower can also be a non-resident. See, we are talking about Paul's income, whether Paul income is taxable or not. So Paul is getting interest from where he is getting to whom he has given a loan. So can he give a loan to a resident? Yes. Can Paul give to a loan to another non-resident? Yes. He can give a loan to another non-resident also. So non-resident. So let's say his name is Alex. He's the borrower. And the first is he can give a loan to Indian government also. So when Indian government is paying him 2,40,000 rupees as interest, see 20 lakh is not the income. The interest on that 20 lakh is income. So when Indian government is paying him, whether 2,40,000 is taxable or not, when I am paying him, I'm a resident. When I am paying him 2,40,000, whether it is taxable or not. When this non-resident is paying him to another non-resident, whether this is taxable or not. Everybody understood that. What are we doing? First of all, tell me, everybody understood what are we doing? We are doing the interest income of a non-resident. We are doing the interest income of the non-resident, that whether this interest income is taxable in the hands of non-resident or not. Everybody, have you made till here? Everyone, please make till here. Everything which you are seeing on the screen, please make it. Very good. Very good. Guys, it is always important. It is always important that where the money is used. Let's just talk about this. The borrower is a resident. The person who's earning income is a non-resident. So you will get like this, that Mr. Paul has received money from Rajat. Rajat is paying interest, 2,40,000 to Paul. Whether this income of 240 is taxable in India or not. Now it depends that Rajat is as actually using this money where. So if I am using this money, if I am a resident, guys, forget about this, forget about this. Let us do one by one. Let us concentrate on this. Income is of Paul. Nirmala Sitharaman is more concerned with Paul's income. She want to take that 240. Whether that would be taxable or not. He will say that I am sitting in US, I will not pay tax. But let us see. So we have section 9. Section 9 says that there are certain income which deemed to arise. Deemed to arise means what? They are not actually arising, but we will consider them as equal to arising. See what is deemed means? Deemed means assume. We will assume that this is equivalent to arising. Correct? So now go one by one. This is fixed. This is fixed. This person is Paul, non-resident, sitting outside India. He has lent 20 lakh rupees. I'm not talking about 20 lakh. I'm talking about the interest earned on this 20 lakh, 240. Right? So this is fixed. 240 is fixed. Paul is fixed. Right now, then I'll be shifting to one by one. First, now I'm talking about the borrower if the borrower is a resident. Guys, if this borrower is using this money in India, if this borrower is a resident and he's using this money in India, always 240 is deemed to accrue or rise in India in the hands of Paul. Paul has to pay tax. So if this resident is doing his business in India, own business in India. So let's say I am doing a business here. Let's say, for example, I am doing a business in Mumbai and I have taken 20 lakh rupees. So where the money is being used, the money is being used in India. So I'm having my own business in India. Always takes it. Or if I invest this money in India, if I invest indirectly in India, see, here I have invested directly in India. Directly in India means directly in my own business. But if I have invested this money indirectly, indirect investment in India. What is indirect investment in India? I have not used in my own business, but I have actually purchased some shares, purchased some debentures, etc. of Indian company. This is also called indirect investment. I have not used in my own business, but I have used in India in some other business. Actually, I have purchased some debenture shares, etc. In these two cases, whenever I will be paying interest to him, it will be taxable. Only in these two cases, whenever I'll be paying interest to him, it would be taxable. First of all, please write this and let me know if you have done or not. Then I'll give you the example. Have you done it or not? Then I'll give you the example. Very good. Okay. Leave one or two lines, write an example. Leave one or two lines, write an example. Mr. X. This is how you get this in your examination. Mr. X, a non-resident. Mr. X, a non-resident, receives interest of rupees 5 lakh from Mr. Y, who is a resident. Guys, tell me who is earning income right now? X or Y? Interest. I'm talking about interest income. Who is earning income? X or Y? First of all, make yourself clear. Who is earning income? Interest income I'm talking about. Who is earning the interest income? Mr. X or Mr. Y? Everybody agree? Mr. X. Very good. So Mr. X is a non-resident. He receives interest income of 5 lakh from Y, who is a resident. Mr. Y, a resident, who has invested this money in his own business, in his own business in Sri Lanka, in Sri Lanka. Guys, tell me, is it taxable for Mr. X or not? Is it taxable for Mr. X or not? He is getting money from a resident person. Is it taxable or not? What do you think? Read this. Read this. If the business in India, if indirect investment is in India, he's getting the money from a resident. So he's getting a money from Rajat, whether Paul's income would be taxable or not. What do you think? Taxable or not taxable? See, only in these two cases, guys, it will be taxable. Only these two cases. So first of all, X is here, non-resident. He is getting 5 lakh rupees interest. Who is paying? Resident is paying. If this resident is using this money in only in these two scenarios, his income would be taxable. Otherwise, not taxable. First of all, tell me whether this resident is using the money is in own business. Yes, but is it in India? No, that business is in Sri Lanka, so it's not invested in India. No. Is it, has he done any indirect investment in India? Whether this resident has done any indirect investment in India? The answer is no. Both these conditions, both these cases, it is not falling in. So this income is not taxable. Everybody understood? So the most important thing is that the money should be used in India. So taxable for Mr. X, the answer is no. Why? The money is used outside India. So no, as the businesses outside India. We are not using this money in India. Everybody understood? Should I explain it again? Should I explain it again? Please tell me no. Or have you understood? Guys, only if it falls in this category, then make it taxable. Only if it falls in this category, then make it taxable. Okay. Example 2. Example number 2. And I think that you will be able to give me the correct answer. Example 2. Mr. Suresh, a non-resident, receives rupees 4 lakh as interest from Mr. Ganesh, who is a resident. 50% received in US and remaining and 50% received in India. This 4 lakh rupees, 50% is received in US, 50% is received in India, and he has received this money from Ganesh, who is a resident. Ganesh has used the borrowed money. Ganesh has used the borrowed money in purchasing Reliance shares. Guys, tell me the taxability in the hands of Mr. Suresh. Tell me how much is taxable. The first option is 4 lakh. The second option is 2 lakh. And the third option is not taxable. Tell me which one is correct. Everybody tell me, what do you think, which one is correct? Logita, Vaibhavi, Shagna has given me answer of 4 lakh. Very, very good. Very, very good. See, this is the case. The person is a non-resident from whom he is getting this interest from a resident. If this resident is using this money either in his own business or some other business, indirect investment in India, then this income is always taxable in the hands of non-resident. So whatever is the amount 4 lakh, whether it is received in India or not received in India, does not make any difference. So some people actually say, sir, only 50% is received in India, so 2 lakh is the answer. No, the answer is 4 lakh rupees. Why? because it is used by the resident in India. Understood this? Now, let us come to a non-resident. Let us come to a non-resident. So if this non-resident, Alex has taken the money, again, look at the example. Now forget about this, concentrate on this. Paul and Alex were friends. Alex needs money, Paul has lot of money. So Paul has lot of money and Alex needs this money. Alex says, I need 20 lakh rupees. Paul says, okay, I will give, but I will charge 12% interest. Alex says, okay, I will give you 2,40,000 rupees interest. And now what Alex does, Alex is a non-resident and he actually invests this money directly, own business in India. Guys, if he invests this money in his own business in India, then 2,40,000 is taxable in the hands of Paul. Paul has to pay tax in India. Why? Because this money is being used in India in Indian business. This money is used in India in Indian business. However, if Alex use this money indirectly in India, indirect investment in India, indirect investment in India, that is, he purchased some shares or debentures in India, then cut it. Write and cut it. So if Alex has borrowed this money, 20 lakh rupees, and he has invested this money in purchasing Reliance shares or debentures, then whatever the interest which he is paying, to Paul, that is not taxable in India. Please write that. Very important. Please write it. Very important. But if he is doing his own business in India, then only it is taxable. See, in case of resident, both the cases it was taxable. But in case of non-resident, this will not be taxable. Only this is taxable. In this case, it would be taxable. Have you written this? And guys, I would like to spend 1 minute also on this. I would like to spend 1 minute on this, that why this is not taxable. So you might be having a doubt that, sir, this should also be taxable because this is also invested in India. I'll give you a very simple example. You will get to know. Imagine a situation. You don't have to write it even. Imagine a situation. Guys, this is Paul. He lives in Chicago. Never came to India. Correct. Non-resident. He's a non-resident. His friend is Alex. He's in Chicago. He's also a non-resident. Never came to India. Paul has given him 20 lakh rupees. Paul has given him 20 lakh rupees at a rate of 12% per annum. Alex has also never came to India. Guys, now Alex has 20 lakh rupees in his bank account. Everybody agree because he has borrowed the money. He has 20 lakh rupees in his bank account. While sitting in Chicago, he actually purchased Reliance shares. He purchased Reliance shares. Guys, first of all, tell me, while sitting in Chicago, can he purchase Reliance shares in India? While sitting in Chicago, can he purchase Reliance shares in India? Alex, I'm talking about Alex. Yes or no? He's sitting in Chicago. Is it necessary that he will come down to India, then he will purchase the share, or while sitting in Chicago, he can purchase? He can purchase in Chicago. Okay. Guys, right now, Alex has money in his bank account because he has borrowed it. Now, 20 lakh rupees he invested in Reliance shares. Correct. Guys, Reliance shares, when they are giving dividend to Alex, they know only about Alex. Guys, is there any chance that Indian government will able to know that this money is actually invested by Paul? Is there any chance? Is there any chance that we will be able to know that Paul has given this money to Alex? We never know about it. There is no chance of it. Everybody understood now. Because how? Whenever, let's say, today you want to purchase shares. Today you want to purchase shares. You got 1,000 rupees from your father, from your papa. You got from papa. You got 1,000 rupees, and from your mother you got 2,000 rupees, and they have actually transferred this money in your account. So now you have 3,000 rupees. Today, if you purchase Reliance shares, whether Reliance will get to know that how much your father has invested, whether how much your mother has invested, no. They only know you. They only know you. Obviously, when we are giving dividend to Alex, that dividend is taxable about Alex. But right now, I'm not talking about that dividend income of Alex. I'm talking about Paul income, interest income. Everybody understood? So we'll never get to know. So this Alex is who is a non-resident. He is actually investing in Reliance shares. We will never get. He is investing it indirectly in Reliance shares, right? So here we will never get to know that who is Paul. So we can't charge Paul. But in my other example, let's say Alex is doing business in India. Let's say Alex is doing business in India. Guys, if he is doing business in India, so he must be maintaining his P&L account also in India or not? Tell me, yes or no? If Alex is doing business in India, so he must be maintaining P&L account. Say yes or no? Correct. He must be showing Alex. This is Alex P&L account, and he must be showing that he is paying interest of 2.4 lakh to Paul. Everybody agree? And since it is an Indian business, this P&L account also would be going to the income tax department. They can actually call this. They can actually demand this, and they can see that 2.4 lakh is paid to whom. Now, can we identify that this interest is being paid to Paul? Yes. Why? Because this is an Indian P&L account. Indian P&L account means because this business is doing in India. So today we can make it out that this interest is going to Paul. So here we can text Paul. Everybody understood? So for non-resident, if he's doing business in India, then we can know about the whereabouts of Paul. But here we cannot know the whereabouts of Paul. Everybody agree? So if resident is using this money in India, whether directly or indirectly, if he's paying it, non-resident is always taxable. But if Paul is receiving the money from non-resident, only if this non-resident has invested the money in his own business in India, then only we can make it Paul taxable. But he is making an indirect investment, we cannot make it taxable. Understood? Indian government. Indian government, you will not get this in your examination. Indian government always. Indian government, if they borrow money, wherever they used, wherever used by, wherever used by Indian government, you will not get this, guys. Wherever used by Indian government doesn't matter. Whenever Indian government pays interest, it is always taxable in the hands of Paul. So whether Indian government is using, has borrowed the money, see, it's not Paul, let's say it's foreign bank, foreign company. So if Indian government has borrowed the money, whether they are using this money in India, whether they are using this money in Bangladesh, whether they are using this money in Burma, doesn't matter. Whenever Indian government will pay, it will always be taxable. You will not get Indian government, but you will get this. Understood or not? Everybody? This was important. And the same concept goes for royalty income, not only for interest income, right? Royalty income and fees for technical services. Guys, if you are using that royalty, what is royalty? Let's say Paul, Paul, what is royalty income? Let's say this person, Paul, has invented a formula to manufacture a different type of shampoo, And let's say we are a resident. I am a resident in India. I have a business of manufacturing shampoo. I get to know that Paul has actually invented this formula. I went to Paul. I said, Paul, can you share this formula with me? He says, okay. and he says that, Rajat, what you will do this with this formula? I will say that I will make shampoos and sell in India. Okay. He says, okay, give me rupees 5 rupees on every bottle of shampoo as royalty. So give me rupees 5 on every bottle of shampoo as royalty. Right? So now he's earning a royalty income. Everybody understood that what is the royalty income? So he has some formula or any other thing which I am using it anywhere. So I would be paying him royalty. Everybody understood what is the royalty is? Now, guys, same thing will happen. And royalty of fees for technical services is very, very easy. So whenever this royalty is being used in Indian, if it is used in Indian business, then please make it taxable. But let's say if I'm using this royalty, I'm using this formula of shampoo in my Australian business, don't make it taxable. If non-resident is paying royalty in his Indian business, make it taxable. See, for royalty, indirect investment will not come, only used in India. So if the only thing which you should know is if that royalty or these services are used in India, let's say I'm paying him technical services. Why technical services? Let's say I have a factory. I have so many machines and these machines are very, very sophisticated. Let's say one of the machine is out of order now and let's say I would like to repair it. So I need some technical services. So if that technical service, if this machine is situated in India, so I'm using that services in India. So if I'm using that services in India, it would be taxable. I'm a resident, but I am using the services in a machine which is situated in Australia. Let's say I'm a resident, but I have an Australian business. If I'm an Australian business, then in that case, please don't make it taxable. Why? Because the use is not here. So please write it. The only important point is where it is used. For royalty and technical services, please write it where it is used. Everybody okay with this? Now, guys, I'll take 5 more minutes, then I'll wrap up. Tax rates. Let me discuss about the tax rates also. See, whatever is your total income, you have to compute your taxes as follows. You have to see whether we have any special income or not. So if we have special income, which is under section 111A, guys, what is 111A? Please write. It is short-term capital gain. Although I will be telling you in the chapter of capital gain. I will be telling you in the chapter of capital gain. This is short-term capital gain on equity shares or equity-oriented units. What is the equity-oriented units? I'll be telling you in capital gain chapter. So if it is short-term capital gain on equity shares or equity-oriented units, the tax rate is 20%. Please remember, everybody knows the tax rate or you don't know? First of all, tell me if someone doesn't know about the tax rate on these. Let me know, please, so that I'll explain. Otherwise, I'll skip. Yes or no? I think everybody knows it. Okay, then quickly write it. 111A, 20%. If it is, guys, it is actually 15% also, but before budget, that I'll be telling you in the chapter of capital gain. So second special income is section 112. 112 is long-term capital gain. Long-term capital gain is taxable at a rate of 12.5%. Then we have section 112A. This is again on equity shares, equity-oriented units. This is equity shares, equity-oriented units. It is taxable at a rate of 12.5% in excess of rupees 1,25,000. Not 1 lakh. Earlier it was 1 lakh, but now it is 1,25,000 in excess of 1,25,000. Casual income at a rate of 30%, and the normal income remaining income at slab rates. I believe that you must be knowing this, and still I would like you to make this completely. So whenever we have a total income, we have to see that for if we have any special income, it should be taxable at special rates and then the normal rates. Let us quickly revise about rebate also. Rebate. Under section 87A, quickly revise. It is only for resident individual and under default regime, first I'm writing it under default regime, residential individual. If total income is up to rupees 7 lakh, if the total income is up to rupees 7 lakh, then you are entitled for rebate. How much is the amount of rebate? Guys, this is important. This is important because some students make a mistake because we don't get rebate from 112A income. We don't get rebate from this equity shares, long-term capital gain. So the amount of rebate would be tax on income excluding tax on 112A, excluding tax on 112A, or rupees 25,000, whichever is lower. This is a mistake which most of the students does. They don't exclude trip 112A tax from it because rebate is not available from 112A. 112A is what? 112A is long-term capital gain on equity shares or equity-oriented units. First of all, tell me, have you written it or not? Have you copied it or not? Last 2-3 minutes, then we'll wrap. Deepa has done it. Everybody else, Kishore, Shagna, Aditya, Pradeepa. Good. Okay. Quickly. Question number 8. Okay. Everybody. Amit, age 82 years and a resident in India. He is a super senior citizen resident in India. Has a total income of 7 lakh comprising of the following: compute his tax liability for this year under default tax regime under 115 BAC. So he has income from PGBP 2.2 lakh, house property 1.8 lakh, long-term capital gain 3 lakh, including 2.5 lakh from 112A. Okay. So everybody with me. Quickly. Last 2 minutes. Quickly. Solution. 8. I'm writing it quickly. Tax liability. Under default regime. Under default regime, we don't give preference to the ages. Age does not matter. For everyone, the slab rate is of 3 lakh rupees. So we have PGBP 2.2 lakh, house property 1.8 lakh, capital gain as its long-term capital gain, it is 3 lakh. See, long-term capital gain is always special. If it is 112A, 112A is on equity shares, how much we have? 2.5 lakh. 2.5 lakh they have given. That's it. It means, see, it is long-term capital gain, right? And long-term capital gain is always special. If it is 112A, this is for equity shares, or if it is section 112, 112 is other long-term. So how much it would be? 50,000. I have just calculated the balancing figure. So this is also special. 112. Long term is always special. And the entire long term is special. But the entire short term is not special. The short term is only 111 is special. Other short term is not special. So first of all, I got the total income as 2.2, 1.8, and 3 lakh, 7 lakh. Guess this person is a resident individual having a total income up to 7 lakh rupees, eligible for rebate. Now, how we'll compute his total income? First of all, you have to identify whether it has any special income or not. So in this case, he has special income. The answer is yes. So he has income from, first you should start from, always start from 111A. First of all, although you don't have to write it for all, but as of now, because I'm discussing this question right now, so I'm writing for each and every special income. 111A, which is taxable at 20%, 112, which is taxable at 12.5%, 112A, which is taxable at 12.5%, and there is an excess of 1,25,000 also is there. Then we should write our casual income, although we don't have a casual income over here. And then the remaining income. This is the remaining income. Now, first of all, out of 7 lakh, you have to see whether we have any 111A. The answer is no. There is no short-term capital gain on equity shares. Whether we have 112, 112 is other long-term. Yes, they have told us that the total long-term is 3 lakh. 112A is 2.5 lakh. It means other long-term is 50,000 rupees. 112A is 2,50,000 rupees. Casual income we don't have. So out of 7 lakh, 3 lakh is my special income. So I will subtract everything and the remaining is 4 lakh. Slab rates would be applicable. Now, first of all, 4 lakh, I can apply the slab rates. 50,000, 12.5%. How much is the tax on 50,000, 12.5%? 6250. Correct, Deepa. 6250 is the tax. On 250, first subtract 125, then apply. Is it 15625? 15625. Everybody agree? Kishore, Joseph, everybody agree? 15625. On 4 lakh, first 3 lakh nil, next 1 lakh 5%, 5,000. Slab rates I applied. First 3 lakh nil, next 1 lakh 5,000. So the total tax comes to 26,875. Webheavy, yes, 111 is amended to 20%. 111 is amended to 20%. It's not 15% now. It is 20%. 112 is 12.5%. This is long-term capital gain, right? Earlier, long-term capital gain used to be 20%. Now it is reduced to 12.5%. 112A, earlier it was 10%. Now it has been increased to 12.5%. These are the amendments. That is the reason I wrote it. Okay, now the total comes to, the tax comes to 26,875. Is he eligible for rebate? Is he eligible for rebate? The answer is yes. The answer is yes. Why? Because this person is a resident individual and his total income is up to 7 lakh rupees. He's eligible for rebate. So how much rebate you will give? Now it's important. How much rebate you will give? Less rebate. Guys, we never give rebate from 1128 tax. From this amount, we will never give rebate. So how much is the rebate? A, tax on income 26,875 minus 111A, so minus 1128x, minus 1128x. So it should be 26,875 minus 15,625. Why this is? So this is 11,250. Everybody understood 11,250? Everybody got it? because from 112A we will not get rebate. 11,250 or 25,000 is a fixed limit, whichever is lower, 11,250. So you will get the rebate of 11,250. So tax is this, rebate is this. So you will get 15,625 is your tax. Add 4% health and education cess. I'm running short of space over here. So after it, it would be 16,250. Everybody understood this or not? Everyone understood it or not? So I actually discussed this rebate to tell you that rebate is not available from 1128 tax. So rebate, so how you will actually will do, whenever you will say rebate, tax on income, just see if there is any 1128 tax, then please reduce that because you will not get rebate from here. Everybody done? So today's homework is, so I've floated this file also on WhatsApp, and few students are not on WhatsApp. So you will be getting at the Google Drive link also. So you will be getting the Google Drive link. So it would be uploaded there. So right now, after 5 minutes, you will get the Google Drive link, but the class would be uploaded. So any lecture, if you miss, I would again request you, please don't miss your live lecture. Live lecture is much more beneficial than recording. Recording is also fine, but in live lectures, you just complete it within 10 days and you will be free. So you'll be getting there are certain folders on the Google Drive. Once you will get the Google Drive link, there are certain folders. In the second folder, there is these file you will find out. So most of you have received it through WhatsApp. The students who have not received it, they can check the Google Drive. Okay, question number 3 and question number 6 is your homework for the day. Question number 3 and question number 6 from this is a homework. You can check the solutions also. And please, once you're doing your homework, once you have done, please send me the WhatsApp. Please send me the WhatsApp. You just scan your register wherever you are doing it. Scan it in a one file in PDF and send it to me. Okay, so I'll see you tomorrow at 7:30 a.m. Till then, bye and take care. If you have any questions, please do let me know. Otherwise, if you want, you can drop now.